We're just going to do a quick search. So we're going to see what type of vehicles are in your area, and I'm just clicking through. I could barely see. So what really happens to your vehicle when it's totaled, and how do they determine what percentage that they're going to total at? Well, in today's videos, we're going to talk about that. We're going to go over the actual reasons why companies total vehicles and how they process that and what determines the value. And then we're also going to go through and explain where they go, what happens to the vehicles, and what options you have, whether you want to keep the vehicle or get rid of the vehicle altogether. So you're in the worst case scenario where your vehicle's likely going to be totaled out. You've been in an accident, the vehicle had comprehensive and collision, so there's a good chance that your vehicle is going to be covered. But let's determine first what the insurance is thinking on their end when this happens. Now, this is an emotional experience, so a lot of people get really tied into this portion of it, and you're just kind of like, okay, what's next? I don't know what's going on. The first thing that you know is that they're going to take the best care of you that they can. This is where insurance companies either are failures or they're successful. And when they're successful, they keep you for 10 times longer when they've done this process correctly. Do they want to pay the money out? No. But are they going to nitpick it? Not necessarily. Some do and some don't. And then there's some options that you have. So the first process that we're going to go to is the vehicle's totaled. You've got towing, you don't have towing, whatever the deal is, somebody's going to pay to tow the vehicle. So that vehicle is going to go to a body shop. Well, what body shop are they going to go to, you might ask? That's up to you. You may need help from the insurance company so they can recommend them. They have lists and files of companies that work with them very well. So that is an option, and I actually prefer to do that myself. That way, if there's ever any problems, then it always falls back on the insurance. Like, okay, well, your guy told me this. You told me to go there. He told me this. I'm following your direction. It's not my fault, right? So that can kind of leave you in an open space. Where if you choose your own guy, okay, there's a couple things that could be shady. Is this guy trying to get more money out of us? Is his guy best friends with them? And they're like, okay, we're going to tell him it's this, and then I'll give you half of the extra money, right? So there are some possible fraud things happening there. So they have to be a little bit careful when you do. Most of the time, if it's common and everything lines up, the dominoes are ready to go, everything's fine, they're not going to question that stuff. So if they know that the guy's legit, it fits within the guidelines of like the average repair costs, and then it fits within what they're looking for, they'll usually allow you to go to pretty much any body shop that you want to. So at this point, we've determined what body shop we're going to. We get there. It's in estimate mode, I guess you could call it. Some have apps where you can see pictures of it and see what's going on with it. 9 out of 10 times, if that frame is bent on the vehicle, it's totaled. There's no fixing it because you got to literally take the whole vehicle apart just to repair the frame. Not worth it. It's kind of a hobbyist vehicle at this point. Anyone that wants to do it just for fun or make a mudding vehicle or anything like that, that's what those are going to be used for. So typically what will happen is the insurance company will determine what's called the actual cash value. And the actual cash value is just like what you would expect. It's basically the cost that it would be to sell that vehicle in today's condition, today's mileage, today's accessories. So they're going to basically take that vehicle and run it through their system. So they're going to determine, all right, what's the mileage on it? That's going to, the more it is, the lower the cost, the lower it's worth. What's the condition of it? They can't really determine that very well because it's obviously been an accident and nobody's recorded what the vehicle looks like. You don't have a photo you're going to send them. So that's not really going to play a huge factor, but it's going to be the age, the mileage, the retail cost. So what can a dealership sell that car in a used lot for? And then all of your accessories that came stock with it. If you've installed something extra, that's something different. If you guys want to get more in depth with that, I'm actually going to link a video right up here so that way you guys can watch how they determine that portion. Long story short, they've determined the value and now they're ready to determine what they're going to do with this. Now, most states, and there's kind of a range, so each state is different. Some states will, anytime it's a 50% or more of the replacement cost, they have the option of totaling that vehicle. Most of the time, the rule of thumb is going to be that if it's 70% or more, some states like Alabama, it's 75%. So that's just their law that you have to be 75% of the value of the vehicle before you can total it out. But in most cases, just think 70%. Anything above 70%, they're going to get rid of because it's not worth it. You got to imagine if they're going to repair that vehicle, let's just say it's 60% of the retail cost, and they get down to that 60% and they're repairing it, but then all of a sudden something pops up. oh yeah, we didn't realize that this, and this was wrong until we unpacked everything. Now it's going to cost 80% of the value. So these insurance companies have a record. It's all about data. They hold this data and they plug you into this data. Okay, this car, this happens, this car, this happens. Every time we get 2008 Chevy Capri and we try to fix it, we find that this happens. And so they've got to calculate that into their calculation, which is why they collect so much data, and they always want to know every little piece, because every little thing could help them determine what that risk is for them. So the car's totaled out, they're done with it. Like they're like, okay, no, we're finished with this. Some states like Michigan are actually going to require that you purchase an additional coverage, and I actually carry it myself. It's like $2 a year or something like that, but it's called property damage buyback, and that allows me to buy my car back if it's ever totaled. Other states don't care. If they want to sell it to you, they'll sell it to you. It's really up to the insurance company. What most companies do is they'll tell you, okay, great, your car is worth $8,000 and we're not going to repair it. We're just going to total it out. Here's a check for $8,000. Oh, you have a loan on it. Oh, loan company, here's a check for $8,000. Pay him the difference back, right? So they'll always go to the loan company, pay you next. Well, no, I got the estimate from my buddy and he says I can repair it. It's only $4,000 to repair it, and you're giving me $8,000 back. Well, can I buy my car back? Well, they'll say, yeah, absolutely. I'll tell you what, let's run it through our database. This is their data again. So they've got connections with salvage yards. So any junkyard that you go to, a lot of them do what's called auctions, and I'll show you here in a minute what that looks like. So they're gonna go to their database, type in your vehicle. They're gonna kind of pretend to sell it to a salvage yard, and they're gonna see what these bids are, because these companies bid on those vehicles. Salvage yards will say, I'll take $200 for that vehicle. I'll pay $2,000 because I can part it out and get $6,000 back. They're all gonna bid on depending on how popular that vehicle is in those areas, and then they're gonna determine what that value is based on that. So they're gonna come back and say, yeah, absolutely, we'll sell that $6,000 car that cost $4,000 to repair back to you for $1,200. You have that option. You can buy the vehicle, fix it up. Most of the time you can put full coverage back on it. Some companies exclude salvage vehicles. In some states you can get them redeemed as repaired, and so they're no longer a salvage vehicle. That's how it potentially goes through the process. I'm going to show you an option too. I'm actually going to show you what, because I've been kind of playing with this a little bit. There's actually a company that you can go to. It's called Copart. If you go to Copart.com or you pull up your app on your phone, you can actually see, I don't know if it's going to show me here, that's going to show you like different auctions. So you can actually click on different auctions and see, we're just going to do a quick search. So we're going to see what type of vehicles are in your area, and I'm just clicking through, I could barely see. So essentially what you're going to get is you're going to get these vehicles that are going to show all the damage, and they're very good at showing what's wrong with them. I highly recommend, if you're going to buy one from this Copart company, that you determine by going there. I would actually go and look at the damage on the vehicle, because most of the time they run. Sometimes it's the hit a deer, the front corner panel's broken, and it was easy to fix, but it was a 10-year-old vehicle, and it really wasn't worth fixing. You may get a good vehicle that you could go to junkyard, buy a new fender. If you're handy with that, you can get a pretty decent vehicle. Or if you just don't care if there's damage, you could drive the car the way it is and have a decent vehicle. A lot of these you can actually even choose not to have salvage vehicles. So if they have still a green title, they were still totaled, but they're not going to put a salvage title name on that title, which means you can insure it just as if it was brand new. There's nothing in there that says that. Now, if the insurance digs further, they're going to see that there was a total on the car, kind of like a Carfax. They check the total report, then they will determine that type of thing. Anyways, guys, if you got good advice out of this, if it was helpful, give it a thumbs up. Don't forget to subscribe if you want more videos like this. My name's Mark from Think Insurance, and I will see you in the next one.